Hello and welcome to Currency Point, presented by me, Evan Lucas, for FP Markets. As always, please have a very good read through of the disclaimer on screen. Everything in this video is general in nature, none of which is relied upon as any form of personal advice. FP Markets are not your personal scenario nor your personal financial goals, and therefore none of which is relied upon as any form of advice at all. It's just general in nature only. The Ballad of central banks. I know it's a little bit corny and I do apologise for that, but I think it's actually the correct term because last week, and it's been going on for ages, let's be honest, we learned that basically they're singing the same poem over and over again. Lower for longer, overshooting is fine until full employment and inflation is met. That's basically the lines across all of them. And not only that, all their tweaking or any form of changes is realistically not moving away from that line in any shape or form. And let's have a look at the two from last week that mattered. Let's look at the RBA and look at the ECB because we are leading into the Fed next week. And this week you might have to find yourself just sitting on your hands a little bit. CPI is coming up and I know that. Keep an eye on it. It's certainly going to play out. But again, the question that you're seeing now is also the other part of this is that we can possibly taper now and go back on it if we have to. And that's also the other part of the argument that we saw last week. So the RBA stuck to its guns. It did technically taper in September like it stated it was going to, from $5 billion down to $4 billion. But it's now extended out to February. And if you actually work out the additional months that it's putting into it, that $1 billion less per month, actually on a longer term basis, they're putting more back into the market because they're going with those $4 billion longer than they expected, and it offsets the $1 billion they were going to stop out with into November. It's also the same argument you could probably put to the ECB. ECB said that it's reducing the pace of its pandemic emergency prep program, PEPP. It had an envelope of 1.85 trillion euros. There's about 500 billion less. It said it's slowing it down. But then it argued that it's not taper because probably the fact that their LITRO loans are still going, its reinvestment programs aren't untouched and are open-ended, you could make that same argument. And again, you can see that with what's going on in trading. Have a look at what happened in euro dollar off the back of it. Fell initially and then eased out, but they're saying the same thing. They're in here for longer. And yes, they're talking about tapering and there's sort of some hawkishness to it, but realistically, it's quite dovish. The RBA is exactly the same. I think if you actually look at what the statement said, is that rates are going to remain at incredibly accommodative levels for the foreseeable future, not just to 2024, the foreseeable future until full employment and inflation is met. That was added to the back end of the statement, and I think that was a big takeout. Aussie dollar, have a look at it. Big spike initially because they tapered, and it's been falling ever since, and so it should. There is a real dovishness to the RBA, and overall, the Australian scenario is very much on a more negative footing than its US peer, and I'd even argue its Euro peer. And that's how I'd look at this, is that if you're looking at this from a trading perspective, you've got to see very clearly that central banks, although they're selling it from the same hymn sheet and they're singing the same ballad, there are ones that are probably further ahead in the story than those that aren't. And I'd argue that the RBA and the ECB is ahead of the story because they are clearly still very much having to support their economies as hard as they can. The US, on the other hand, is probably getting to a point where it can back a little bit away. And that's why I'm still, and have been for quite a while, fairly strong on the idea that the US dollar is going to continue to win out. The only question is whether or not the Fed comes and suppresses that trade because they need to look like they're actually acting, even though realistically they're backing away.